Union Budget 2022 is out. What did you expect? What did you get? Very important questions, because everyone I'd spoken to was not really expecting too much. And frankly speaking, in terms of the voice or simply the feeling, there was no spice, right? We didn't throw in the spices. We didn't burn a fire. But we really got everything that you should have to keep the growth trajectory going. So my expectations were they would spend more on capex and they would keep the infrastructure sector moving. That would sort of achieve the growth outlook, which was also there in the economic survey, which is 8.5 to 9%. And that's thinking that there can be no upside to that growth number. So we start with 8.5 as a projection, and you could actually end up with over 9% growth the way it is set up. Because the government actually has room to spend a little more than what they're claiming. Their tax revenues might end up being more buoyant than they expect. And they're also going to be getting money from the LIC IPO, which is probably not, I'm not sure whether it's priced into the budget expectation. So they sort of make it all look nice. But it's going to be a little nicer than we think is my sense of it. And so you broadly kept the momentum. So you had a momentum of growth that had picked up. The momentum is surely going to continue. They didn't put it in so many words, kept status quo across the tax regimes a lot, and actually extended some of the benefits that they had put together during the COVID times and the effects of rising prices in terms of the steel sector. A lot of that is taken care of. The hospitality sector supported till another year. Many other benefits extended for a couple of years in the manufacturing space as well. So that sort of, just keeps the stage as it is, nothing negative. And looking at the achievement of growth of 8.5 to 9% or more simply means that earnings growth for the next year from a market perspective at the Nifty level could end up being another 25-30% at least. And so that's not going to allow the market to fall off the tip of the iceberg or something like that. Like people were thinking, just wait after the budget, see what happens to you. That's the Twitterati rambling away. But these are people who probably have no idea of what a budget is or what even economic data looks like, and have probably never seen me being negative about markets as well. So a lot of people who've not experienced that can't understand how I could be bullish at all levels. But the fact is, if you weren't, then you probably didn't have a position ahead of this. So this was not a runaway day. But if it ended up being a 300-500 point day, I could have said this, in much more loud thumping words. But the point is the same, is that apart from just the global momentum in equities that we are seeing come back after the correction post the Fed announcements, we are now past all the events that we had for the time being that were relevant. So you have the US done, and now you have the Indian budget done. So you don't have any more events into the year end except March, which is the financial year, and does sometimes bring in some pullback simply because a lot of people hold back till they pay the advance taxes and complete the year end. So that's about the only thing. But right now we are still in Feb, barely started. It's the 1st of Feb, and so with all the bad news behind us and now this positive news that growth is sort of set on stage, buying comes back in. The only thing which has been missing, I think, which is the concern of everyone, is will FII step in or not finally. One thing I would have hoped for in terms of spicing it up is, if the government had actually done something to make it attractive for foreign money to come into India. If that's the only thing missing, and only reason that I see why they're not coming in is, and I mentioned this earlier, and I don't know if it's true, I don't speak to anybody, it's just my guess, that maybe the withholding tax, what we call the long-term tax, which applies to now them also, maybe one of the hindrances, because many of these investors, when they're doing country allocations, actually consider this as one of the important deciders as to where they actually put money, apart from which market they think is going to do well. So moment there's a tax issue, they may actually allocate less. So I can only think of that as a potential thing. But the current government, if you see the history of the BJP, they've really not been a populist government. So anybody who thought they would do populist measures, people are telling you they're going to be populist. I'm like, why would they be populist? They've never been populist. I mean, if you look at the entire history in the previous or current regimes, they've always been more economic in nature. always looking at what they need to do to get the economy moving, because the Vajpayee government faced the tough economic slowdown that we had in the late 1990s, and he dealt with that. And in 2013-14, when the Modi government came to power, also they were dealing with a post 2008. We wouldn't call it a recession, but sort of slowdown phase that was going on. And so they've always dealt with it in terms of how do you revive this, and that's been the pressure on them. And now they've actually got a revival of much higher degree post the pandemic, and what the key issue with them would have been to keep the momentum going, and I think that's sort of achieved. So very brief budget. I mean, I think even last year there were a lot of points I could actually sit down and take, so I would be writing with a pen all the time, and this time around I was actually waiting to write something, and actually couldn't even put down a few words. I have written some things, but nothing much to really expand upon. So the only thing is status quo, and things continue to move in the trajectory that they have moved. And given that we've already had a 2-month correction, markets are set to continue higher. So whether they would fly or whether they would not, for me it was only a matter of what will be the speed. That's what I mentioned in these spaces with CNBC last week, is that the speed would be a function of how the budget turns out. Otherwise, we are already set to move higher. So I guess whether it's slow or fast, I think tomorrow you'll see a much clearer discounting of the market action. Today it was mostly based on the announcements, which is why you just saw cement, steel, and the related energy related, rather I should say those which are in the solar power and so on, the green energy space. Those are the three sectors that were really flying. Even the banking sector, which will be a beneficiary of infra spend, didn't really move much. And so I think all those effects you'll actually see tomorrow in the other sectors and where else money goes, because life will be back to normal from the sentimental effect that you saw midday, where there was an intraday sell-off, and even I got worried a bit, because sometimes markets react to the immediate sentiment also, and I thought maybe you could have ended the day down at that point of time, because maybe the market would think that we didn't get any spice. You wanted some spice in our food, and there's no spice, so we don't want to eat. So they can throw a tantrum, but that didn't happen. By the end of the day, that mini tantrum was done and dusted. And so that's a sign of strength. But tomorrow, I think always, event days are always event days. Always look at the following day, just like what you're seeing in the dollar index. You had the event day, the dollar was rallying ahead of the event, and once the event was done, then the sentiment reached an extreme on the dollar, which I've written about. And you've seen the reversal over the last 2 days, which is also supporting what really happened in the metal sector, though mostly today, I think it was more based on the announcements that happened in the budget. So interesting setup, I think, setup to move, and sort of gives you confidence, at least on the longer term 1 year growth outlook. When it comes to the short term, of course, we are back to looking at charts and technicals, and that's what we'll continue to do in our day-to-day updates. But on the big picture, I don't think it raises any concern. Whatever was announced today simply keeps us on track to the 1 year outlook or 2 year outlook that we should have on the markets from a pure economic valuation perspective. So if you continue to grow earnings, then the current valuations will not look expensive at all. That's the simple takeaway as far as the Nifty is concerned. So I think if you ask me a bet what's going to happen from here, I've already said that we were oversold and ready to move up. So my bet is that we are going to go back to all-time highs. Whether we do it slowly or we do it quickly is the only question, but we are headed there. Whether it happens by the first week of March, or else we get that March consolidation and then it happens sometime in April or May, is completely different. But once markets start a particular direction, I don't think they are halting in a hurry. So the potential is that this rally itself would carry us towards the all-time high before we pause again. That's my take on what's going to happen over the next couple of weeks. But definitely, I'll repeat what I've said in many other interviews and spaces, is that the banking sector looks set to revive. We're already seeing the financial sector momentum picking up in the last few days. We've seen it even yesterday. Today they may have been a little more flattish, but I think you will see that pick up given whatever is happening. I mean, if you get the economy pick up, you get the capex cycle, capital goods sector pick up, then the big loans are going to come from banks, are going to make that money. And so the banking sector is going to do well. That's my, so Bank Nifty and Nifty both. So that's my takeaway after the budget. Thank you.